It was a very strong 6 months for the housing market. We do think that housing will likely moderate over the course of calendar 22 and 23. Like to think that business lending can stay at high levels. I think being able to support Australian businesses not only get through the pandemic, but also coming out the other side. And we've seen very strong sort of deposit growth. So we certainly think volumes will stay high. It remains to be seen whether we'll see the exact set of circumstances that saw, as you said, very high levels of volume growth right across our business in Australia and in New Zealand.
Well, Matt, there's been a lot of focus on the net interest margins. They fell 17 basis points. Your CFO expects them to remain under pressure until cash rates rise. How low can margins go, and has the pressure from fixed rate loans peaked?
Well, yes, as you said, there was pressure on net interest margins during the period. There has been really for the past 3 years as interest rates have come down. That's a reality of the context in which we operate within. We've done our best to try and navigate through a variety of different initiatives to deliver the best overall margin outcome. I guess in particular, a number of factors in the 6 months. One of those that did put some downward pressure on margins were customers switching to lower margin fixed rate loans, as well as a sharp increase in interest rate expectations. We do think that some of those pressures will moderate in the second half, but clearly margins do remain under pressure until we're going into a rising interest rate environment, which is good for bank net interest margin. We expect to see some of those conditions later this calendar year.
Matt, if we see rate rises at a somewhat slowish pace, what other areas might the bank look at for profit?
Well, there's lots of different factors. I mean, for a financial institution, it's sort of both sides of the balance sheet. So assets or lending pricing, there's deposit pricing. Clearly, it's been a very difficult few years for depositors. So, in terms of the interest rates that are available with a cash rate at 10 basis points. There's a number of other dimensions, in particular funding, that can go into that. But look, as we've said, there is pressure on net interest margins. I mean, overall, I think actually the net interest margin over the last 3 years, given the cash rate has been 10 basis points, is actually very good. Certainly compares very favourably both domestically and internationally. We do think rates will start to increase inevitably. We do think that they'll rise rather slowly, which I think is good for many borrowers who aren't used to being in a rising interest rate environment, and hopefully through that cycle some slightly better news for depositors who've definitely been under a lot of pressure over the last few years.
Just continuing on the outlook for this year and going into next year, you mentioned rates there. When do you expect them to rise, and what's your outlook for inflation and housing?
Yeah, so overall, our economics team believes the cash rate will increase for the first time in August this year, a cash rate of approximately 0.75 of 1% by the end of the calendar year, rising to about 1.25% by mid-2023. As part of that, they see a continuing pickup in inflation from where it is at the moment, which is just over 2.5% underlying, and a pickup in wages growth. I think that's the main drivers that will support rates starting to increase, as I said, in the second half of the calendar year. In terms of housing, we believe it'll be in the order of 4 to 7% increase in prices still over the course of calendar 2022. There's obviously a number of different variables that contribute to that outlook, and we'd see some softening in 2023. Probably in the region of 5 to 10%. That will depend to some extent on interest rates, but also a number of other factors. But also worth bearing in mind, house prices over the last 12 months have grown 22% nationally. Stronger growth in a number of different areas, and probably for the first time, certainly in many years, we've seen strong price growth not only in our cities but also in regional areas.
Matt Comyn, great to talk to you. Thank you for your time.
Pleasure.